Big news in the world of trade. Former U.S. President Donald Trump is making headlines again. This time, he's doubling tariffs on Canadian aluminum and steel, taking them from 25% to a whopping 50%. But why is this happening? And what does it mean for both countries? Let's break it down. So here's the deal. Trump has always been tough on trade, especially when it comes to protecting American industries. He argues that cheap imports, yes, even from Canada, hurt U.S. manufacturers. That's why he's now pushing for higher tariffs on Canadian aluminum and steel. Now, for Canada, this is a big deal. The U.S. is their biggest trading partner, and these new tariffs could mean higher costs for Canadian companies, maybe even job losses. But it's not just Canada that'll feel the heat. U.S. industries relying on Canadian metals could see prices go up too. So, will this actually help American businesses, or will it backfire? Some experts say this could spark another trade war between the U.S. and Canada, something we saw during Trump's presidency before. Others argue that the move is simply a bargaining chip for future trade negotiations. And of course, Canada isn't staying silent. Officials are already pushing back, calling these tariffs unfair and hinting at possible countermeasures. Will they retaliate with their own tariffs? How will this impact everyday consumers? And could this shake up U.S.-Canada relations? One thing's for sure, this decision is going to have major consequences on both sides of the border. What do you think? Will higher tariffs help American workers, or will this just create more problems? But it's not just aluminum and steel producers feeling the heat. Big automakers like General Motors, Ford, and Stellantis are also caught in the crossfire. These companies rely heavily on Canadian aluminum and steel for making cars, trucks, and parts. With tariffs doubling to 50%, their costs are about to skyrocket. Let's put this into perspective. Cars require a lot of metal, and when material costs go up, companies have two choices: either absorb the extra costs or pass them on to consumers. And let's be real, when have companies ever just absorbed costs? This could mean higher prices for new cars in the US and Canada. And it's not just the car prices. With production costs going up, automakers might be forced to cut costs elsewhere. That could mean job losses, factory slowdowns, or even relocating parts of production. Workers in the auto industry, both in the US and Canada, could be facing some tough times ahead. So, how are these companies reacting? Well, so far, Ford, GM, and Stellantis haven't held back their concerns. They're warning that this move could disrupt supply chains and hurt competitiveness, especially when automakers are already dealing with supply shortages, the shift to electric vehicles, and global economic uncertainties. Speaking of EVs, let's not forget, many of the batteries and key components for electric vehicles also require aluminum and steel. These tariffs could slow down EV production, making it even harder for automakers to meet demand and transition away from gas-powered cars. So to sum it up, Trump's tariff hike isn't just a Canada-US trade battle. It's a move that could shake up the auto industry, impact workers, raise car prices, and even affect the future of electric vehicles. Will this strategy protect American jobs, or will it end up costing both countries in the long run? What do you think? Are these tariffs necessary, or is this just another trade war waiting to happen? And of course, Canada isn't taking this lightly. The Canadian government has already fired back, calling Trump's tariff hike unfair and harmful to both economies. Prime Minister Justin Trudeau and key trade officials are making it clear they're not going to sit back and let this happen without a response. Historically, whenever the U.S. slaps tariffs on Canadian exports, Canada responds with counter-tariffs of its own. And this time, it's looking like history might repeat itself. Canadian officials are already exploring their options, from placing their own tariffs on American goods to taking the fight to international trade organizations like the WTO. If Canada does retaliate, expect tariffs on U.S. exports like agricultural products, consumer goods, and even auto parts. The last time a trade war broke out between these two countries, we saw Canada slap tariffs on everything from American whiskey to ketchup. Yes, even ketchup. But let's be real, trade wars don't just affect governments and businesses. They hit everyday people like you and me. If this escalates, we could see prices rise on everyday items, industries take a hit, and even job losses on both sides of the border. So what happens next? Well, Canadian leaders are pushing for diplomatic talks, hoping to convince the U.S. to reverse or at least reconsider this move. But with Trump doubling down on his America First trade policies, things are looking tense. Could this turn into another full-blown trade war? Or will both sides find a way to reach a deal before things get out of hand? One thing's for sure, this decision is going to have big consequences, not just for businesses, but But for all of us, what do you think? Should Canada retaliate with its own tariffs or try to negotiate a better deal? So, how will these tariffs actually impact Canada's economy? Well, let's break it down. The aluminum and steel industries are a huge part of Canada's economy, employing thousands of workers and contributing billions of dollars in exports every year. With tariffs now doubling to 50%, these industries are facing serious challenges. Here's the problem. Canada is the largest supplier of aluminum and steel to the U.S. In 2023 alone, Canada exported over $17 billion worth of these metals to American companies. A 50% tariff means these exports suddenly become way more expensive for U.S. buyers, which could lead to a drop in demand. And if demand falls, that means job losses, factory slowdowns, and a hit to Canada's overall economic growth. It's not just the big industries that will feel the pain. Small and medium-sized businesses that rely on steel and aluminum, like construction companies, auto part manufacturers, and appliance makers, are also going to see costs go up. And guess what? Higher costs for businesses usually mean higher prices for consumers too. That's right, these tariffs could even affect everyday items like cars, refrigerators, and even soda cans. If Canadian companies can't sell as much aluminum and steel to the U.S., they might have to cut production, lay off workers, or raise prices to make up for the losses. And if businesses raise prices, that's bad news for inflation, something Canadians are already struggling with. And let's not forget, this isn't happening in a vacuum. Canada, like many other countries, is already dealing with economic challenges like high interest rates, a cooling job market, and rising living costs. An industry-wide slowdown could make things even worse, especially in provinces where manufacturing and metal exports play a big role in local economies. Ontario and Quebec, in particular, could be hit the hardest since they're home to most of Canada's steel and aluminum production. If factories cut jobs or shut down, thousands of Canadian workers and their families could face financial uncertainty. So what's next? Well, some experts warn that if these tariffs stay in place for too long, companies might look for new markets outside of the U.S. But that's easier said than done. The U.S. has been Canada's biggest trading partner for decades, and shifting supply chains isn't something that happens overnight. At the end of the day, this tariff hike isn't just a political move. It's an economic shakeup that could have ripple effects across industries, workers, and everyday consumers. Will Canada find a way to fight back? Will businesses adapt? Or will this push the economy into deeper trouble? Only time will tell. So, with Canada's economy on the line, what's the game plan? How will Canada respond to Trump's tariff hike? Well, there are a few possible strategies that the Canadian government could take, some diplomatic, some aggressive, and some in between. Retaliatory tariffs, fighting fire with fire. First, the most immediate response, retaliatory tariffs. Canada has done this before and it worked. Back in 2018, when Trump imposed tariffs on steel and aluminum, Canada hit back with tariffs on U.S. products like whiskey, ketchup, and even household goods. The pressure from American businesses forced the U.S. to eventually roll back the tariffs. This time, Canada could target key U.S. industries like agriculture, consumer goods, or even auto parts, putting pressure on American businesses to demand a reversal. But the risk? A full-scale trade war that could hurt both sides. Trade negotiations, talking it out. Another approach? Diplomatic talks and negotiations. Canada could push to hold high-level trade talks with the U.S., using its leverage as America's biggest trading partner to negotiate a compromise. A big part of this strategy would be rallying support from U.S. industries that rely on Canadian metals, like auto manufacturers, to pressure Washington into rethinking the tariff increase. If enough American companies start losing money because of these tariffs, they might lobby to get them reversed. But the challenge? Trump is known for being tough on trade, and with an election approaching, he may be unwilling to back down easily. Canada also has another card to play: international trade laws. If the government believes these tariffs violate trade agreements, they could take the case to the World Trade Organization, WTO, or use dispute mechanisms in the USMCA agreement. This could put legal pressure on the U.S. to remove the tariffs. But here's the problem: these cases take time. By the time a ruling happens, businesses might already be struggling. And even if Canada wins, the U.S. could still ignore the ruling, as it has in the past. Strengthening domestic industries, playing the long game. And finally, Canada could focus on strengthening its own industries instead of waiting for the U.S. to change its mind. That could mean investing in manufacturing, expanding trade partnerships with Europe and Asia, or even offering subsidies to companies hurt by the tariffs. Some experts suggest that Canada should start reducing its reliance on the U.S. by finding new buyers for its steel and aluminum. But again, that's a long-term solution that won't fix the immediate problem. So, which strategy will Canada take? Right now, we're seeing a mix of diplomatic pressure, possible retaliatory tariffs, and international trade complaints. But if things escalate, we could be looking at another full-scale trade war. What do you think? Should Canada hit back with its own tariffs, or should they try to negotiate a better deal? Let us know in the comments. And as always, don't forget to like, share, and subscribe for the latest updates on global trade, business, and politics. See you in the next one.